picking up good vibrations.
Hi everybody, Alex Deploy here from Expert Forex, and in this video I'm going to show you how to make best use of the profit retriever having just bought it. So I'm assuming that you've just purchased the profit retriever, and I'm going to be giving you tips how to get the best out of this profit retriever. Now, many traders that purchase a new EA want to get the very best out of it straight away, and they want to squeeze the best performance out of their EA, not knowing much about the EA. So what I'm going to suggest here is that you take the approach of needing training wheels and learn the EA in a slow but thorough way. Forget about these fantastic returns that you can make within a week. First, learn the EA and become an expert at that particular EA. Now, the first tip is keep things simple by only trading Forex instruments. Indices and metals are quite complicated. In fact, I don't even trade them. But I find a lot of people buy this EA and then jump into the most complicated instruments. So tip number one, stick to Forex, become an expert at trading the profit retriever using Forex, and then only can you move into the more advanced instruments. Now, one of the first questions that we normally get is, what time frame must I put this EA on? And it does not matter, because this EA works on price levels, and there is an indicator in this EA, but it is been hard coded for the 15-minute time frame. So no matter where you put the EA, whether you put it on a 4-hour, 1 hour, 15 minutes, 30-minute chart, it's going to do the same trading. Now, the one thing you must realize about the profit retriever, it does need a large or big account, and we recommend a $10,000 account. Now, there are not many traders that have a spare $10,000 lying around that they can put into an account to trade the profit retriever. So what we recommend is you use cent accounts. Now, with a cent account, it turns $100 into 10,000 cents, and the EA will then trade it as if you have $10,000, but it's in fact trading 10,000 cents. So that is your way about getting around the need for a large account. Now, the most important thing to understand is the actual trading logic used by the profit retriever. It has very unusual trading logic, and what I'm going to do now is I'm going to take you through the trading logic so that you can get a better understanding of how the EA works. So what I've done is I've actually dialed into one of our servers, in fact the one right behind me, and I am now going to show you one of the accounts on that one, and I'm going to just open this particular one, and you can see there's a FX Blue publication EA that's running, so the results are being published to FX Blue, but here is some live trading happening right now. So let's have a look at that live trading, and I'm just going to fold this away to give you some idea of this particular account. Now, this account's been running for about 3 or 4 days, and it is doing pretty well. It's already generated a 10% return, and I'm going to show you from the first transaction that's happened. There is the first transaction. How the EA decides on a direction is it looks at this moving average, and if the moving average is pointing up, it will buy. If it is pointing down, it will sell. But it only uses that for the first transaction. So for the first transaction, there's the first transaction right there. It is a buy transaction because the moving average has been pointing up in the previous candle. So it also looks at the previous candle. It doesn't look at the current one because it doesn't know whether it's going to be pointing out up at the end of the candle. So it looks at the previous candle. It says that one was pointing up, I'm going to buy. So that's the first thing. It makes a decision on the direction of the candle based on the previous candle, not the current one. Now, once it's made that decision, it will keep on buying until a profit is made. So it doesn't change the direction even if the moving average changes. So there it made a buy, and then the price went up there, and you can see that line in fact is the target, and the target is based on the gap size that we set in the settings. I'm going to be talking about the gap size later on, but so this was a successful transaction. It hit the gap size, then it went into another buy because the moving average was still pointing up, and this one obviously wasn't the right thing to do, so the price came down, and then at the next gap size it entered another buy. So you've got buy, and why did it enter buy? Because the moving average was pointing down, because the initial transaction said buy, and as I said, it doesn't change direction once it's done an initial one. So it went down, the price went up, and then at that level there is a level where those two buy transactions make a small profit, and that's why it was cashed in, and there you can see the profit was reached $20. Then it went into another buy because the moving average was up, and it then hit the target again. Target was about $100, so it's making profits all the time. It's made $100 there, $20 there, $100. So it makes $20 when it's wrong, $100 when it's right. So again, it went up nicely, hit the target, made another $100 there, and then it went into a buy and hit the target, and you can see these lines show you the length of the actual transaction, and hit a buy there, and another $100 was banked, and then it hit the target again right up there, hit the target, entered another buy. But this time it wasn't too good because it was now starting to trade against the trend. So it entered another buy, another buy, another buy, and then eventually after quite some time the sum total of those 4 buys got closed over here at a profit of $20. So that's how the profit retriever works. It cashes in very nicely when it's right, and it cashes in profitably when it's wrong. But you have to wait. Sometimes you can see there's a long waiting period before those 4 buys got cashed in positively. So the price doesn't have to go back to the original buy that caused the that went wrong. It has to go somewhere about 50% return sometimes to create that buy. But that gives you an idea of how the logic for this price retriever works. Okay, so now that you understand the trading logic a little bit better, what I'm going to do is I'm going to go into the main settings in a little bit more detail. They revolve around the gap size and the lot sizing. So we're going to start with the gap size. Now on my left you can see a table with the gap size settings, and I'm just going to go through those settings one by one. So the first setting is the gap size. Now the gap size is really from the start of a transaction, how far must the price travel in pips to reach the target for that transaction. So if you see a 40 entry in that particular setting, which you can see there, it means that the price has to move 40 pips to reach the target of that transaction. Also, if the price goes the wrong direction and goes in the opposite direction than anticipated, and it travels 40 pips, it will open a second trade in the same direction as the initial trade. So that's the role of the gap. It determines how far the price has to travel to hit its target or to open a new transaction. Now in the settings, it allows you to vary the gap sizing, and as you can see there, there's a number 1. So it's basically saying start at 40. After one unsuccessful deal, increase the gap size in pips by 2. That's what those settings over there say. So what will happen is if it goes down so if it goes down 40 pips in the wrong direction, it will open a 40 pip gap, but the next time it goes down, it will open a gap of 42 pips, because that's 40 plus 2. Next one will be 44. So that's how that works, and that's in fact a risk management tool, because you want your gaps to get bigger as the price is going in the wrong direction. So that's the one key setting that you have to have. Now, here is how you manage risk. Now, this is very important. So the current setting is 40, which is a conservative setting for a gap size. If you want to increase risk, you lower that number. So you might move from 40 to 30. Now 30 has more risk, but more reward, possibly. And if you want to even increase risk more, you go to 20. But 40 is a good starting point for you as a new trader of the profit retriever. If you want to decrease risk even more, then you can move to 50 pips. So that's how you control risk, and that's how you make your account more robust, in that it's less likely to be blown if you use big gaps, and more likely to be blown if you use small gaps. And that will make more sense later on when you start experimenting with those gap sizes, and it will give you the ability to say, all right, this account isn't doing well, I must increase the gap size to avoid big drawdowns. Number one setting to avoid big drawdowns: increase the gap size. Okay, so now we're going to look at lot sizing, which is the other very important setting that you've got to consider when trading the profit retriever. Now, this is where strategies come into play, and I'm going to show you this one strategy because this is my recommended strategy that you start off as starting out trading the profit retriever. It's a pretty safe and low risk strategy. So you would be trading this on a $10,000 account, and it says what are the lot sizes for the initial trade, and at the moment we've got 0.5 lots in there, so it's half a main lot that is the starting point. So what we're saying, the initial trade will be made at 0.5 lots. That might not mean much to you, but as you start trading the profit retriever, you'll understand how that works. Now, coming back to risk management, if you want to increase risk, you increase the 0.5 to 0.6 or 0.7 or even to 1 if you want to. That increases risk. It also increases your return. If you want to decrease risk, you lower that 0.5. So you go to 0.4 or 0.3. That's how you decrease risk. And it's important, as you'll see later on when I recommend that you test the profit retriever before trading live, that you build the skills to balance the gap size and the lot sizing to be low risk. Because you want to be around in 2 years' time and still be trading the profit retriever nice and profitably. If you increase risk beyond a certain point, you'll blow your account. Sooner or later, not tomorrow, maybe in 2 months, maybe in 4 months, but if you increase your risk excessively, you will blow your account. So it's a very delicate balance there, and the settings I've got in there are pretty good. So then it says, okay, I'm starting with 0.5. After one transaction, then decrease the lot size by 80% of the 0.5. That's what those settings show you there. So in other words, 80% of 0.5 is 0.4. So the next transaction will be 0.4. And then the next transaction will be 80% of 0.4. So that would be 0.32 and so on. So what we're looking at here is a decreasing lot strategy. And it just goes down and down and down, and then it says when must I stop? And what we've got in there in the settings is stop when you get to 0.01. So this strategy will go down to 0.1, and then the next phase kicks in because there's entries for the next phase. The next phase says, okay, once I've reached 0.01, I'm going to start increasing the lot sizing by 130%. So 0.1 will go to 0.130 and so on. So it will increase by 130% of the previous lot size. So this strategy is a decreasing lot size and then an increasing lot size. And then the setting there for 0.05 is when that increase starts reaching 0.5, it will stop and just stick with 0.5. So that's the profit retriever strategy, where it lowers the lot sizing and then increases the lot sizing, and that has proved to be quite a good strategy, and that's why I'm recommending that. But you can also experiment with just decreasing. Never increase in the beginning. Never start with an increasing strategy. Always decrease from your initial lot size. Okay, so we've covered the two settings that you have to worry about, the gap sizing and the lot sizing, and I've made it easy because I've suggested those numbers for you. Then we get to currency selection. Now, just think about it. The profit retriever relies on the currency going up and coming down, or going down and coming up. So those are the kind of currencies we're looking for. Ones that trade in waves, or even if they're trading in up and down waves. We don't want currencies that shoot straight up or shoot straight down. So the ones that tend to trade sideways or trade in waves have low volatility, and the ones that tend to trend very strongly have high volatility. So just as a guideline, when you are selecting currencies, try to select low volatility currencies. And where do you find low volatility currencies? There's this fantastic website called Mataf that has currency volatility information for you. On your screen right now, you can see that information, and you can see which currencies are the highest volatility and which ones are the lowest volatility. So another way of controlling risk, if you're going to use a high volatility currency, use gap sizes of 50 or 60. If you're going to use low volatility currencies, use gap sizes of 40 or 30. That's just the general guide, but that's how you control risk compared to the volatility of the currency. Hope that makes sense. So now that you understand the building blocks for the profit retriever, how do you go about trading it? Now, the first thing to do is to build a demo portfolio of a number of strategies that you're going to follow. So for instance, those settings that I gave you earlier, you could apply them to, let's say, 10 different currencies and test them on those 10 different currencies. So the idea here is to create a portfolio of demo accounts. Now, why would you need that? It's because every broker has a slightly different approach to their lot sizing, their pip sizing, and all that type of thing. So you want to cater for your particular broker, or alternatively, you want to learn how the EA works and where the dangers are and where not. And if there are dangers, you just up the gap sizing and lower the lot sizing. So you need to build those skills over a period of, I would say, 3 to 4 weeks. Run a portfolio of 10 strategies to learn those skills and find out which currencies perform best on the settings that you've selected. Now, if you need lots of demo accounts, I have a video that I've made about a broker that provides unlimited number of demo accounts, and also they do not expire after 30 days. They just continue being available. So I'll leave the link of that particular video in the description of the video, as well as in the commentary of the video. Alternatively, use the demo accounts available through your own broker. And here's an example of me. In fact, you can see lots of examples behind me of 20 demo accounts being traded at the same time, each on a separate platform, and there are therefore 20 strategies being traded there. Now, as you saw earlier, I do link all of these strategies to FX Blue, and here is an example of my FX Blue portfolio. This is a very new portfolio that I created about 4 days ago. I created 30 accounts that I'm testing. For instance, I'm testing at a 40 gap, I'm testing at a 30 gap, and then I'm being very aggressive and I'm testing at a 15 gap, and I want to see the dangers that are involved and the changes that I have to make to the various currencies that I'm trading. But on one of the key things that you can see in this information is that every single one of those 30 accounts are positive. Now that's just phenomenal. After 4 days of trading, every single account is positive. Shows you the power of the profit retriever and the particular strategy that I've highlighted. Now here are these settings that I would recommend that you start with as a new profit retriever trader. There are the settings. What you would do, you'd make small changes for more volatile currencies and less volatile currencies in terms of gap sizing or lot sizing, but you could virtually trade those settings on 10 different currencies and have a look at the results that you get. A link to these settings will be in the description of the video as well as in the commentary of the video. Now there are also advanced strategies that you can get to, but I would say focus on getting these simple strategies working. Once you've got that under control, you can start looking at advanced ones, which are, for instance, hedging strategies where your moving average, instead of being 4, you just increase it to 400. So that makes sure that all the trades in the one account will go in one direction, and then you open another account and you reverse the direction in that account with a 400 moving average, and then you know, for instance, that all the trades in that account will be buys, and therefore you have a semi-hedge. It's not a total hedge, but a semi-hedge, and you can trade these two accounts. So there's a lot of other strategies that you can get into, but as I said, master the basics. Make sure that your trading wheels protect you from getting harmed, and once you've a master of the basics, then you can move on to the more interesting strategies. So the idea with the testing is you would test 10 or 20 strategies on demo accounts, and then you would select the very best strategies and introduce them to live trading. But when you do that, do not introduce one account. Introduce at least 5 accounts, because you need to trade on a portfolio. The profit retriever can get stuck when it's in a slight drawdown. It can get stuck for a week or 2, and nothing will happen on that account. So if you're trading one account, you'd be sitting looking at an account doing nothing for a week. So that's why we recommend you trade 5 accounts, and they can basically offset each other, and you can trade on a continuous basis, and the risk is therefore spread between those 5 accounts. And again, remember, 1 cent accounts make that very possible. So you only need $500 to trade 5 10,000 cent accounts. Now, just a reminder to have a look at our linked account service. You'll see that the profit retriever is quite dominant in that particular service, and if you're really good, you can actually find the strategies used by the traders in the linked account service by looking at the closed orders provided by FX Blue. So go and have a look at the linked service. It does give you an idea of the potential of the profit retriever to produce these abnormally high gains. Now, I hope you've enjoyed this video, and I hope I've given you a really good start for your profit retriever trading. You don't have to do optimization, just do forward trading of those settings that I've already provided you, and you'll find that by just adjusting the gap size upwards if it's doing badly, or the lot sizing downwards if it's doing badly, you can do well. If you're an aggressive trader, obviously you can decrease the gap size to become more aggressive, and you can increase the lot size to become more aggressive. So those are the only little changes that you need to make as a profit retriever trader. So from me, Alex Eploy, cheerio.